One Step Ahead by Lundquist and Beslick.
Welcome to One Step Ahead Radio. Another session, another week. We are back, and I hope all of you listening to us are doing fine. There will be some interesting news coming across the world on ESG and sustainability, and as you know, this is one of the best updates out there on these topics. And James is here with us as usual, and we will comment and go through some of these things that we believe are interesting, not only from perspective related to sustainability, but also where the world is going in general. Now, James, welcome to One Step Ahead Radio.
Hello, Sasha. Hello, everybody who's listening. How are you doing today?
It's all good. It's all good. I hope you're doing fine too.
Yes. All ready to digest another wild week.
Yeah, certainly. And this week is probably going to be quite bumpy in so many ways, both from geopolitical news coming out of US, but also in terms of the temperature, the world temperature. January was apparently the hottest month on the record. Last month, basically the global average temperature is climbing 1.75 Celsius above pre-industrial levels. The temperature in January averaged 13.2 Celsius according to preliminary data from European Centre for Medium Range Weather Forecast. This is a UK-based research institute supported by 35 states. In a post detailing the new data, climate scientist Zeki Housefather said he was surprised to see another all-time high, given expectations that La Nina would make 2025 cooler than a record hot 2024. And what he said is that this means that January 2025 stands out as anomalous even by the standards of the last 2 years, he wrote. James, January has been a quite heated month from also political point of view and what's going on in the US, and also repercussions across the world based on the decisions or expressions, I would say, the new administration in the US is doing. What's your sort of a take on some of these things happening? We know that hottest temperature, and this is also from January perspective related to a new released comment that Europe is not prepared for climate-related disasters that will have a significant impact on insurance capacity of the European Union to cover these costs. Any comments from your side on that?
Well, to a certain extent, to continue reading these headlines and continue seeing these things always sends a chill down your spine. And to a certain extent, I think for people who aren't climate scientists, it's difficult to, go beyond that level of absorbing the headline and the main focus. In fact, I was reading the comment from James Hansen just at the same time, which is kind of correlates with this. The famous NASA scientist who, so many years ago, decades ago, was the first to sort of speak to the Congress in the US to talk about climate change.
Yeah.
And now he's published, together with colleagues, a paper in Environment, Science and Policy for Sustainable Development, talking about exactly what you mentioned before about the El Nino cycle finishing. And they have a theory saying that, well, actually, we've been lulled into kind of a false sense of security thanks to shipping pollution.
Yeah, exactly.
Which is crazy. The aerosol pumped out by the ships has kind of masked or had a slight cooling effect. And now that, the interrelations of these things are crazy. But because we've been, since 2021, I believe, there's been tighter rules on shipping fuel, and therefore there's less sulfur in the fuel. It's actually putting temperatures higher because there's less of this masking thing. And obviously there are others who disagree with this, but the comment from James Hansen talking about, we've been in a Faustian bargain that now we're going to pay the price, and 2 degrees is dead. Last year we were talking about 1.5 degrees being dead at COP, and he just says, the 2 degree target is dead because it's warming much faster than we realized. So I think, the headlines about a single month are going to pale into comparison really with what the longer term trend is.
What's surprising me is the fact that all of these things are happening. I mean, we get the information, we got a lot of different kinds of sources communicating to the public in general what is going on in the world, and there are so many things, and I think people generally even don't have capacity to take in. I mean, if you take in relation to what you said now, and if you take what the numbers are coming out from the European, basically, Insurance and Occupational Pension Authority, I mean, these people are actually looking at the way how we can secure pensions and occupational security for people going forward. I mean, Petra Heikkinen, which is the chair of this Insurance and Occupational Pension Authority, has raised concerns about the ability of governments and banks to manage these increasing financial burdens. I mean, if you look at the numbers, the annual cost of natural catastrophes in EU, encompassing floods, storms, droughts, and freezing conditions, has surged to an average of 45.5 billion in 3 years leading to 2023. This represents more than double the previous decade's annual average of 17.8 billion, surpassing basically inflation rate. I mean, James, it looks like we have the evidence, scientific evidence. We have the people in a so-called a real economy who are guarding our ability to protect ourselves, saying that this is not good. But yet, there is not so much movement happening. I mean, it seems that people have are turning the blind eye or deaf ears to this. Why do you think this is happening?
Well, it's the whole political environment around these things is casting doubt on science and scientists. As you say, I think it's very correct. People struggle to have the ability to sift through competing, what they hear is competing perspectives and views on something that should actually be objective. So what was objective, everyone sort of in the previous era that we grew up with, these things were uncontested. Now everything is contested, and I think people struggle to see, they just hear people shouting at each other. So it's difficult, and you wonder how extreme events is going to change people's behavior, because that's in the end, it's like not what people think, but what will they actually do, and do with their money, and do with their their investments, or where they buy a house, and how they can insure that house, and when it's destroyed, how you rebuild it and where you rebuild it. And so I think that's going to be, you keep on waiting for something that's going to shake people into actually, and also how they vote. Sorry, obviously that was.
Yeah, of course, the political side matters a lot, and we've been talking about this before. These events, sort of natural disasters caused by climate change or amplified by climate change, do not seem to influence people to change the way how they vote, which is a rather interesting sort of a takeaway. There have been a lot of studies done on this. And when we are at it, if you think about some political decisions like the ones that new administration in the US is making with Donald Trump as a spearhead of this, basically his restrictions on renewable energy risk sparking an electricity crisis in the US, driving up cost for consumers and handing China an edge in the global artificial intelligence race. Many industry executives have warned about this. And in his first week in the office, the president ordered a moratorium on offshore wind approvals and reviews of existing wind leases, and paused it. Basically, he braked the neck of the hundreds of billions of dollars of incentives for green energy. It doesn't make sense, because I guess entire policy of this new administration in the US is to make America great again and to make it cheaper for American citizens. But this doesn't seem to be what is happening, and including the insurance cost in Europe, and including the hottest January on the record, it seems to me that we are heading towards a rather bumpy time going forward, James.
Yeah, absolutely. And what you just said reminds me of an excellent newsletter and slide deck that came in just a few days ago by Nat Bullard, and he used to be at Bloomberg Green, and he every year for years has done this huge presentation about trends in decarbonization, which actually I invite people to go and check out, because it's maybe useful with all the noise going on just to look at some of the statistics and trends and actual real money and where it's going and how climate investment is changing, because you can see from 2021 onwards really how money has started to shift. And he writes, and he says, we're in an exceptionally noisy moment, but also in a moment where the signals amidst the noise are very important and potentially foundational. So last year was the hottest record for emissions, a record for coal consumption, but also records in the energy transition, a record for solar, wind, battery energy storage development, record for electric vehicle purchases. So, we're kind of reaching the culmination also on the energy transition side. So sometimes it's useful to go and look at those numbers and just sort of remind ourselves of the transformation that is actually happening at the same time. So those two competing forces are certainly an act.
It's a convergence, basically, of sort of opposites, which is rather interesting. And one of the reflections I have is looking at the numbers and what's going on in Europe in terms of renewable energy, and what I just said earlier in terms of the cost which are related to natural disasters and the lack of coverage from insurance industry that will create most likely havoc and most likely will be one of the reasons why we will face the next financial crisis, is pretty much related to the new data that has been published by Bloomberg NEF, which is the annual report they do. Europe is losing momentum in the contest for the low carbon industries of the future. And apparently, worldwide investments in the low-carbon transition, including spending on clean energy and related grid improvements, electric transport, decarbonization of industry and buildings, reached $2 trillion, basically up almost 11% from the previous year. But the report notes that the annual growth rate was deceleration from the rates about 20% seen in the previous 3 years. And the last year investments in transition was well over double the 929 billion seen in 2020. Many business leaders seem to have grown quiet on green issues over the past 5 years. The amount of hard cash actually invested has increased in a serious way. The interesting thing is that the strong noble growth, these numbers that are quite strong, as you said, the convergence of these opposites is to a very large extent thanks to China. Chinese green investment grew 20% last year, accounting for 134 billion of these 202 billion global increase. James, we have insurance industries basically screaming out, we will not be able to cover this. Europe is losing momentum on renewable energy. We have completely new and in many ways no logical policies by the new administration in the US. The question is, where to sort of grasp, as you said, look at the facts, where to grasp a hope or where to grasp some arguments to support that we continue on this sort of a journey of transition. What's your take on that?
Well, I think it's interesting, and we're going to be looking this month really carefully about how Europe responds to this very noisy, very hot environment. And because really they've been, trying to champion their climate leadership and also ESG leadership in the last few years, and the Green Deal was a central part of that. And it's kind of like, how are they going to reboot that grand project in this new era? And I'm sure you saw also the large group of investors that's been writing to von der Leyen, asking her not to roll back on ESG regulation and the famous Corporate Sustainability Reporting Directive, the CSRD, which the Germans and the French have been proposing to water down in order to deregulate and not burden business and not impose costs and compliance. And it was interesting, there's an investor group representing 6.6 trillion euros of assets calling on them not to cave into this pressure.
Yes.
And so considering kind of the path that Europe's been on, squashed now between the US and China, as you say, how, with the Draghi report, and now we've got von der Leyen famous compass on competitiveness, how, corporate sustainability in business and ESG is going to actually play a role in some kind of vision going forward, and how they can actually make that work without alienating business at the same time. So that's going to be an interesting, I don't know what you made of that call out just at this very critical time ahead of this big decision.
No, but James, I think you're sort of alluding to very important sort of a topic, which is the response of the financial industry to these new events, I would call them, around the world in relation to sustainability and ESG in particular. As we know, Europe is the leading force on this. I think it's very encouraging to see a lot of European banks and institutions supporting this and making the voice heard in this context. We will need to see, and we don't know that yet, how Europe will respond to expected, I think, push from the US on tariffs and other things, and what will the implications be for American businesses operating in Europe. As we know, many of them are operating in Europe and having Europe as a huge market. They will need to comply, and how will that be dealt with is something that we will explore going forward. James, thank you very much for today. I think this was very encouraging and interesting discussion. I wish all of you listening a great weekend, and we'll talk again next week. Please share this with your friends, family, and people you think should listen to this. James, many thanks for being here with us today.
Thanks to you, Sasha. Goodbye to everybody, and thanks for joining.